Okay, welcome to this impromptu live stream today. I don't imagine anybody's actually watching this, but I wanted to get it up because I had some questions. So we're going to take a look at a Mag7 stock. We're going to answer a couple other questions too from the Patreon members. And before we do that, I'm going to give you guys a quick word about the market and what we have going on there. But actually, even before that, I'll also mention that I am out of town. I'm in Phoenix this weekend, and so I don't have my standard setup with my all my monitors and all that stuff. So I can't really see questions very well or anything like that. So if anybody is watching today and you do have questions and I don't see them, then I'll get to them later. But I'll try to remember to go back and forth between all these windows and check. So, okay. So anyway, so the market, as I mentioned in the blueprint, and people may or may not know because the news is all over the place these days. The negotiations failed with Iran. The Iran-U.S. negotiations failed. J.D. Vance was there for, I think, 21 hours. They went back and forth. They agreed on a bunch of stuff, but they disagreed on some other stuff. Like, for example, Iran does not want to agree to not do things that could lead to the production of nuclear weapons. So the bottom line there, I'm not into politics and I'm not into news or any of that, but the reason it matters is because it is going to have an effect on the market. Right before this, I went back and looked, and there are instances of individual stocks or indexes falling, multiple percent that week that the war started. I think like February 28th or something, 27th, something like that, March 1st. And so we should expect to see, a change in the market. Like we're not going to get out of this for free. And last week's relief rally is going to disappear. And so for people that, are reading the weekly blueprints, the values, the strike prices on the strategies in there, all of those strategies, those will change based on how much the market drops. So if people are interested in getting any kind of updated strategies on those, and you don't, and you want me to do some of that work, that leg work, I can do it. But just be prepared, because we're going to lose that rally this week that we got last week. And who knows, right? Maybe there's an announcement on Wednesday that that they figured it out and everything is good, and then the market surges. But until that happens, we're going to see some downside. So that's the news about the market. Now let's get to Apple. So down in the bottom right corner here are some notes I made. These are the three questions I'm going to try to field. These top two questions are from GTH Trading Magnate members, so I'll handle those first. So first question was, can you take one of the Mag7, top of which is tradable using your 1% income strategy, and trade with explanation of why you chose it and how you manage the risk in case the market turns due to some bad news? Like, for example, the negotiations failing. This is perfect, right? So I got this question days before before this announcement, so it works out well. So I chose Apple here. And the reason I chose Apple, and you see a bunch of stuff on the screen here that I'll talk about because I was doing some analysis right before we started. But the reason I chose this is, so first of all, Google, I'm going to do a post on Google at some point this week. So I skipped Google. But as I was going through my stock a couple days ago to write the blueprint, Apple popped up as a stock that looked like it may have hit the bottom. And it's showing some good trending, some upward trending. So hopefully this doesn't get too busy here with all of these other lines that I've drawn. But if you take a look at Apple here, if you take a look at the Apple on this one, let's go to the day candles. So if you take a look at Apple here, it's down. You can see, and eventually I'll cover how to analyze this Ichimoku, but just already I can tell looking at this, it's not is like a buyable stock right now. And in particular, it's actually about this red and blue getting ready to cross here. This little area down at the bottom would suggest, and given that it's below the cloud and the cloud is red and our lag line is in the cloud and the price is below the cloud, like this is like a sell. This is actually still kind of going towards a selling point and the day candle. But if we step back to the hour candle, it's like a whole different ball game now. So we're seeing this, there's this massive drop, which we'll talk about, this big red candle right here, these two big red bars almost. But it's still looking positive, right? Like we get that huge drop, but then this cloud looks great. If we activate the linear regression, we've still got a really nice positive slope there. It looks good on a 1 hour candle. We step up to 4 hour and it's the same sort of story. Look, we've got like a reversal of these blue and red right here, like what is essentially like a type of a golden cross, right? If we were looking at MAs. So the cloud looks really nice. Like in terms of trending, you know, when we see the 1 and the 4 hour looking really good and we see the day looking poor, essentially what that tends to indicate here is that we may have hit a bottom and we've been trending up over like short and medium time frames, and now we're getting the long time frames, and you know, that's something that we don't or that's something that would suggest that we're getting, you know, some kind of you know, change, like structural change. Okay, I see the question here. Can you give your thoughts on options for SPY in general? Yeah, okay, so I'll go over that. I will not forget it. I'll try to go over that at the end here. So back to this. So yeah, so that's where the choice came from. That's where we chose, where I said, okay, Apple looks good. I think we hit our low here, provided nothing, you know, outrageous happens. Like, we're good to go. Like we, you know, and so I chose Apple because it's got these nice technicals right there. So if we get rid of the Ichimoku cloud, I've made some notes here, and you'll notice this. I mentioned this doji candle. So like on the 1 hour time frame, if we go back here, this candlestick right here, this like super tall high, the big high and low, and like the open and close right in the middle that kind of looks like an extended plus sign or like an upside down cross in this case, is called a doji. And what this really means is like the market is totally confused and they have like no idea what's going on, right? And I don't know what happened to Apple in this purple rectangle. Like, I don't know. I tried to go back and look at the news in TradingView, and it only went back to like March 11th or something. So like I couldn't look at this, but like this doji, like Apple was going up and it hit this trend line that I'll talk about in a minute, and then this doji happens, and then out of nowhere over the course of the next like day, Apple drops 5.25%, and it hits this horizontal bar down here that I drew, 246.14. And so I don't know what that was, but like we're going to use this for the analysis in just a minute here. And so then if we step back, I had another one. Let's see if I can find it. They're all over. Oh, here we go. Okay, so here's the start of the war. So here's the start of the Iran war right here, February 27. Yeah, Friday, February 27th into the afternoon. And then it drops down here right on Monday. So this one is another case where we've got like a big drop out of nowhere, and we don't see a doji here, but you know, the market wasn't confused, right? It's not like it didn't know whether to buy or sell. Like it, you know, there was a war and everybody's like, oh my God, we gotta sell everything, right? And so that's what happened here. And so this was a 3.43% drop right there. And so what I did was I also drew some other trend lines. So if we look at this trend line going downward, this has got this negative slope. You can see it hits here like 1, maybe 2, 3, 4, 5, 6, 7, 8, 9, 10, like a whole bunch of times. It hits this trend line really nicely going down. I probably could have drawn another one on the bottom side here. Let's see. I probably could have drawn another one in here, something like this, but I didn't because it's not particularly relevant. We care right now about the highs. So this trend line hits, and then there's this inflection point that's like right in this range around here, right? And at the same time, there's this rectangle moving up, like we hit this bottom in this little demand box, and I'll talk about that in a minute. And I'm using those more in the recent past because I'm getting ready to write an article on them for everybody. But so yeah, we hit like a bottom here, and we have a couple of these bottoms, but like we're kind of like structurally, like it seems like, okay, we've gotten to an oversold condition, like people are going to start buying now because it's like the stock feels worth it regardless of what's going on in the world. And so then there's this other trend line, and this other trend line moves back upward now. And so you can see the same thing, 1, 2, 3, 4, almost 5, 6, 7, 8, 9 times over the course of, you know, this couple of weeks, it hits this trend line on this way up. So if there were no war going on, then, you know, then this is perfect, right? Like if there was no war and you guys wanted to know, like, well, what's the, you know, what strike prices, this is it. Like this is the time where you potentially could make the money. And I might say, okay, like go for just in the money or just out of the money, at the money strike prices that have the highest extrinsic value, the highest profit, you know, margins, and go for it, because like this stock just looks like it's, you know, it's going to churn out. But based on the war news, almost certainly, almost for sure, we expect this stock to drop on Monday. The real question is how much, right? How much? Well, that's why I drew these, that's why I looked at these losses here, this 5.26%, right? 3.43%, these happened over like a day or two, right? So worst case, I don't know, maybe 5.26% is, you know, is a worst case scenario. Maybe it drops down into this demand box here. And so I drew this demand, and I'll talk about the demand box really quick. I know this is taking like a long time, but like there's actually like a massive amount of stuff that we can go through with this stock, because there's actually a lot of interesting things going on. But notice this box, like usually we talk about levels, right? And a level is like a specific exact value. But when we talk about supply and demand ranges, we're talking about ranges that we almost kind of empirically are able to determine that a bunch of people out there, and when I say a bunch, I mean like, you know, hundreds of thousands or like millions of people have like sell orders set in these ranges right there, and we can determine them relatively well empirically by analyzing in this way. And so you can see all of the times, like a dozen times, that the stock kind of hits these areas and then bounces back up. And like I could actually draw another box going up right here, right? And so so this range is kind of our bottom of the mill range, and it just so happens that this 5.25% drop is inside that demand box. So okay, so that's all well and good. So let's look at some moving averages. Why? Because now it's time to think about strike prices. Worst case strike price. Apple right now is at 260. Worst case strike price, I would say, is down here in the like at the bottom of this box, like 245, $15 down, which is not that substantial given that the stock is in the hundreds of dollars range. But when you look at these levels, all these moving averages that Apple surpassed, like look at this. Like when we hit this doji and everything dropped, everything just tanked all the way through these moving averages. My phone is going crazy. Hopefully it's not too loud. All of these moving averages just got destroyed, but then they get destroyed on the way back up too. And so here at that 260.88, that's the 50-day moving average. This one right here, right where it's testing it right now. And this 50-day moving average, you can see where it keeps testing it over and over and over again. So like that's kind of a resistance point for Apple, right? It doesn't seem like it wants to go above that, but it doesn't have any problem going below all these moving averages all the way down to this box. So here's how you determine how much to make versus how, as you say, what is my appetite for risk? every single one of these moving averages is going to provide some level of support for Apple. And it's either going to break down below that support or it's not. And so you just have to say, how many of these am I willing? And the farther it goes down, right? The farther it goes down through all these levels, the more profound that support becomes. And so you just have to say, okay, well, how much do I really want to risk in Apple? And that's like a personal discretionary call. Like nobody can make that. You just have to decide how bullish or how bearish you are on Apple or the stock market or the war headlines or whatever. But if you're really concerned about it, you can go down into this demand zone of 246, and you may not make as much premium, right? You may be making a 0.1 or 0.2 or 0.3%, but like it's a safe 0.1 or 0.2 or 0.3%. And I'm going to get to that in question number 3 down on the right in a few minutes here. So that's a huge download with Apple. Like I know that's a lot of information, and actually we could even go over more, but I'm going to leave it at that just so that I can kind of move on, because it looks like I'm already like 16 minutes into this or something. So we're going to move on to the next thing. And Ian, I'll come back to your question also. Okay, question number 2. Sometimes in the weekly blueprints, you provide a delta number with possible option strategies. What is that? How is it used? Okay, so delta, and I'm in the process of writing an article about this too, because I want to get this baseline of stuff out there, but it takes a long time. Delta is one of the terms in the Black-Scholes model. It's a partial differential equation, and it's pretty complicated, right? It actually follows the same path. Like if you go look at like heat transfer equations in physics, the differential equations that look at that, and like random walk equations and stuff that like in physics that determine like that kind of model how molecules or particles, particulate matter floats in a liquid. It turns out that we model the stock market with very much the similar structure of equation, right? And so that's not, you don't really need to know that, but the point is that delta is a derivative in that equation, and the derivative in this case, this calculus term of a derivative, it's dVds, and what that means is it's a change. Delta is the change in the price of an option, like the premium, right? The change in the price of an option with respect to the change in the price of the stock. So it's saying when a stock price changes, an option price changes by this much. And so if we open the options chain, oh, look, it's working. How wonderful for us. Okay, so delta over here on the far right, you can see these delta values, and they're negative here, for these puts. And so what you find is, if we look at, let's see, let me make sure I'm on the right, 69, 60. Okay, so this big black bar in the middle here is at the money. So when we look at delta, it doesn't mean this exactly. It's a little bit of not the correct thing, but it actually is the correct thing. It's just not the whole picture. But delta is like, it's kind of like the probability that the option will assign. It's like that derivative there is like, it's essentially, if you know of, or you go look up a probability density function, delta is just that. And so what you'll notice is it's really close to 50-50, right? 0.52, 0.59, just in the money versus just out of the money. And so that's kind of like, flipping a coin. Like, it's right in between those. Like, we don't really know which one. And so the higher and actually, so as you move away, these 0.43, 0.35, and we're looking at silver here, right? And so silver is 69.08. If we were to write a put on silver at like 66.50, then we go look at the delta at 0.18. Well, of course, it's less likely to assign than 60, the next strike up, right, at 22. And so the more this delta number will change, the more volatility you have, the more variance you have in the stock, the more that this delta will kind of spread out as it gets lower, because you don't know as well. There's more variance. So that's what delta is. Like, sometimes I put these values in with the strike prices and the strategies because I want people to have like an easy way to say, okay, 0.18, well, I guess maybe I can just think about that as like an 18% chance of assignment, right? And it obviously it doesn't mean it's 18%, right? Like, because the Iran war comes and something happens and it all drops through the floor, right? But like, it's just a mathematical calculation, but it helps for you to realize, well, of course, if you go up here to want one pass just out of the money, that 43%, it's much more likely. So that's what delta is. That's what we're looking at when I put those in there. So hopefully that is helpful. And then the last question here: number 3, are you making 1% gain when we are in a bad market like right now? It seems too risky. Okay, so this question is so interesting because I think there were a lot of people that saw the Theta Profits interview. I mean, I think it's got like 12,000 views or something right now. So a lot of people watched it, and the headline, right? Like the hook about that is, can you really make over 1% profit a week? And if you go out and compound 1% a week for 10 years or something, then even if you start with $10,000 and you compound 1% a week for 10 years, the numbers just they become astronomical, right? So very, very few people, if any, are making over 1% a week for decades at a time, right? And so this is a really important distinction to be made here, super, super important. When I talk about 1% a week, the 1.04, right, which includes that risk-free interest rate, the money market cash, this cash sitting in the account earning interest, I'm not saying that my account balance grows by 1%, 1.04% per week forever, right? What I'm saying is that my goal is to make 1%, 1.04% per week in premiums on options, right? So, and again, it's not a goal that I have to make, right? I don't do stupid stuff just to get to the goal. I mean, I have once or twice, right? Because, I'm a human like everybody else, and everybody gets FOMO and dollar signs and all that stuff. But that's where you get good at trading, is you minimize that, right? So I'm not making 1% every week of my account balance forever. What I'm making is 1% of the account balance in premium gains. And so what that means is if I never, ever, ever have a bad trade, then yeah, that would be 1% a week said and done. But, I have losses. Last week I did a live stream talking about, how I had my 3 worst trades of the last year. And, those trades substantially, noticeably dropped my profit last year. So that's the thing. Is just that this is we're talking about 1% in terms of how much cash comes in each week from premiums. Now, to get to really get to the question here, I'm sure I'll answer this question 100 more times over the next few years. But to really get to the question, are you making 1% gain when we're in a bad market like right now? No, I don't have my figures right in front of me, but I think for the year, in terms of premium profits, I think I'm actually closer to 0.85%. Maybe it was 0.9%, high 0.8 something percent. And actually, I usually by Monday or Tuesday, I've made that pretty much solely off of calls without even writing any puts. And that's relatively easy as long as the stock values don't become too drastically different, right, from what I own the stock at. But in a tough market, strike prices become managed more tightly, and premium goes down because of it. And so, when the market is bad like this, really like the 0.8% that I'm at right now in terms of premium gains is about what I've got, but I also have a drawdown in my account. And so, once we come back from that, if everything works out okay, like who knows what the final value is going to be. But yeah, when the market's down, I mean, when the market's, bullish and it's going up, then those gains are like substantially over 1%. But there's still, bad trades and there's still losses, and that detracts from the overall account balance. But, that 1%, it shouldn't be like you can't obsess over goals or they just ruin you, right? So it's just there to try to give some benchmark. So that's that. I'm happy to answer more questions on it. I hope that that's, useful information for people to hear. Okay, Ian, can you give your thoughts on options for SPY in general? Okay, so SPY, and I talked about SPY a little bit in the blueprint, right? And so I didn't give like specific strategies in there because I really wanted to see where the market goes, and I told the Patreon members that I would, come back and revisit that once we saw how much it goes down. But here's the thing. Here's the cool thing about SPY, is that, wrong piece of there we go. The cool thing about SPY is that the options trade like daily, right? So like you've got, options expiring the 13th, the 14th, the 15th. And I know a number of people, in fact, I met a guy this weekend that does this. I know a number of people that essentially write, like either callers or especially strangles on like 0 date expiration strangles on SPY. And so this is kind of an interesting way to go. And the thing about it is that SPY ends up being something like an index, just doesn't move the way that a stock does, right? Like there's so many different stock in there, and it's weighted, and it's got all these things going on. So like you can't make the kind of gains with this as you can with individual stock with the same amount of money. But the thing is that you can generally pump more money into it and not have to worry about it like assigning so much, right? And maybe we go look at these deltas really quick here. So delta 0.24, so a quarter coin right there, and at 674. So that's a almost a $6 difference, $5.50 difference, right? Which I guess is like just under 1% change, right? And so you see here, like, I mean, that's not huge, but the problem is that, let's see, where are we at here? Where are some bid and asks? Okay, so $1.33, $1.35. So at $1.33, we're looking at like just between 1/5 and 1/6, like 0.2%, like 0.18% premium gain. So the gain is super small. And so the way that you would play this is that you either stay, safe with this and you don't make the same amount of money, right? Like you're like, well, I know it's not going to move as much and I know I'm not going to make as much premium, but I'm okay with that because it's less risky, right? Or you pump more money into it. And so, and that means, you're risking more money, right? So your risk goes up that way, but you're reducing your risk by working with something like SPY instead of an individual tech stock, right? Like I said, the other thing a lot of people do is strangles, and this still requires more money because now you're either writing naked calls or you own SPY and still writing puts. And so But the strangles, people love to do the strangles. And so you can take, like, so one thing that people love to do, I know I keep talking. I have ADHD, right? Bad ADHD, so I love rambling. So what you can do is you can wait until like the last 30 minutes of the day, last hour of the day, and you can write a strangle on this thing. And you can go down, a certain amount, and you can write that strangle. And if it assigns, then it's going to be relatively close, and you can probably just sell it the next morning. But what you find here is that you're going to have this potential gamma squeeze, right? Which is actually related to delta, and I'll talk about that a different time. But as you get close to expiration, and as the stock price gets close to the strike price, that premium is going to go up. And so towards the end of the day, like if it's at 679.46 and you write this thing for 678 or 679, potentially you have a super reasonable premium there, and you can do that every single day of the week. Every day you can write these things if you want, if that's what you'd like to do, right? The other thing which I mentioned, and I'll talk more about, are doing these diagonal spreads. And so if you do a diagonal spread on SPY, you choose like, a set of strike prices, and you choose a set of expiration dates, right? And that's where the kind of the diagonal comes from. And so you can, choose like a 678 expiring on the 13th, and a 677 expiring on the 14th, and a 676 expiring on the 15th, or something like that, right? Like you might want to space them out, but like if you go down to 676 here, and you go over, now notice the bid and the ask, right? Like it's actually like become reasonable. We're approaching 0.5% of premium gain on this for a 3-day to expiration, right? $3, 676. It's like, I don't know, maybe it's 0.4%. So you can kind of, spread your risk out that way, is like choosing, and you may do like a 1 day and a 1 week and a 2 week and a 3 week, and choose strike prices that are different. But you really want to choose them based on where you think things are going to go, right? Like the technical analysis matters more than people give it credit for, but so does, this geopolitical mess, right? Like if you think the Iran war is going to last a long time, you gotta be careful, because with SPY, it's gonna change more slowly, but it's gonna have a really, really solid structural trend, and it's gonna really, really cling to moving averages and stuff, probably a lot more strongly than most individual stocks, which, especially the tech stocks that I trade, which just bounce around like crazy, right? So those are, a few thoughts about trading SPY. If Ian, if you want to talk more about it, let me know, and we can like have some like more specific discussions on it, and because there's like, some people like just specialize in trading SPY, like that's just what they like to do. But you can sit down and do the same analysis here, right? Like you can look at some standard deviations, right? And you look at it over like a 4-hour time frame, right? And here, when we were looking at those strike prices earlier, right, we saw this 674, right? And so like if we do a 1 sigma standard deviation, well, let's go to the day chart. So like you notice like the 1 sigma here is at 665. So it wouldn't be crazy for SPY to change 1 sigma in a day, right? And so like you kind of want to start mixing that type of information together and stuff. But like I said, let me know if you want to go over some more of that stuff, and we can chat about it either in another live stream, or we can do it on Patreon, or whatever works. So anyway, I think that's good. I think, let's see, where are we ending here in terms of time? Like 35 minutes. Yeah, sure thing, man. No worries. So I think that worked out pretty well. I'll do, if I get a number of other questions, then I may do another one of these, because I think they're fun and I like the flow of them. And it gives good stuff to talk about that people actually care about, rather than stuff that I think people care about. So anyway, enjoy the rest of the Sunday, and be careful trading tomorrow because it's probably going to get a little bit messier before anything gets any better. So have a good evening, everybody, and take care.